Hello and welcome to Custodian TV. This is for me a great way of being able to communicate up to the minute information with what I think's important for us to focus on. Before I get into it, I just wanted to recount something that happened for me in the last few weeks. I was called to do a forum by one of Australia's major banks to 100 of their top business clients. They were talking about the mood of the market and what they're reading in the papers, etc., and how that contradicts with how the economy is actually going. When I sat down with the 100 business clients in the forum, I just asked them, naturally, how they think things are faring, whether it's getting better or worse. 25% of them felt that things were going to get worse. The other 75% felt that things were going to stay the same or improve over the next year. Interestingly, since then, we've had this round of rate cuts, or beginning of rate cuts, where the Reserve Bank cut the rate by 25 basis points. At the forum, when I was asked to give my parting advice, the parting advice I gave was, if you're in business, you need to have a sense of urgency. Because we say the saying, time is money, but really time is the great enemy. Whatever we do in business, we need to do it as effectively and efficiently as we possibly can, therefore with that sense of urgency. I came away from the forum and people were saying to me how much of a difference that made, just hearing they needed to have that sense of urgency and that fire in their belly about what they're actually doing. And I came away thinking, maybe us as custodians should adopt the same practice as CEOs of business, to have that sense of urgency about what we're doing. And when I say sense of urgency about our rentals and increasing our rentals, sense of urgency about finance and looking for that great finance, those great finance deals. And thirdly, that sense of urgency about building your portfolio, because you only have a window of time to do that. Now, we're entering a different phase in the market. Yes, the Reserve Bank, or I should say a year ago, the Reserve Bank put up interest rates nearly 1% between August 2007 and March 2008. Today, and they did that because the economy was growing too quickly. Today, they're pedaling back on interest rates, 0.25%, as you've seen, and flagged that they're going to reduce interest rates even more. Where that's going to go, no one really knows. There's predictions it could go a further 1 to 2% lower than it is today. What opportunities are there? Well, interestingly, in the market today, you can get a fixed 1, 2, 3 or 4 year or even 5 year fixed rate at 1.5% below the variable rate. Now that's really an interesting thing from our perspective. Is that something you need to look at? The other key dynamic, and what everyone's talking about, is this housing crisis, and that the next boom, fueled by these interest rate reductions, the next boom will be in housing. And this is really right on what we talk about. Because today in Australia, we need around 184,900 houses, close to 185,000 homes a year. We can currently supply around 156,800 homes. So we're short nearly 28,000 homes being constructed in Australia on an annual basis. Now, if I translate that to actual states, in an area like Victoria, we're short today around 9,000 homes, growing to 14,500 by 2010. Queensland is short today around 15,000 homes, growing to 16,500 homes by 2010. And New South Wales today is short around 31,000 homes, doubling between now and 2010. Forecasted growth rate in those three cities by BIS Stratton is that Victoria will grow, that is price growth, by around 16% between now and 2010. Queensland, 22% between now and 2010, and New South Wales 7% between now and 2010. Interestingly, on Adelaide and Perth, they haven't got the same constraints in that they have a good supply of housing, so there's no critical shortage. The critical shortage is going to be on the East Coast. Doesn't mean that you won't get value in Adelaide or Perth. It just means you might not have that critical shortage that's going to enable you to get rental growth and significant capital growth. So let me just leave you with that tip. From a business perspective, We run our businesses, and CEOs run our businesses with a sense of urgency about what we're doing. The best custodians will run their portfolio with a sense of urgency about what they're doing and make decisions knowing that it has an effect 1, 2, 3, 5 years from now. The prediction on growth in housing, today the median house price in Brisbane is around $475,000. It's predicted to go to $630,000 in the next 3 to 5 years. That's significant growth. And remember, what we've been doing is scouring the market to bring product on under $400,000. Similarly, in Melbourne, the median house price today is around $432,000. And predictions is that that'll grow by another 30 to 40% over the next 3 to 5 years as well. What we've been doing, we've been scouring the market for product under $350,000 and under $400,000. And a lot of product we bought on in Melbourne was under $300,000, and that's all but evaporated. So you see what we're doing is we're starting at that bottom end, because as soon as that market turns around and interest rates come off a little more and a little more, that's where you'll see the market go up. Thanks for listening to me, and thanks for dialing in, I suppose you'd say, to Custodian TV. Thank you.